So what we're seeing right now as the weekend came into view is that the bond market started to rally on Friday. So what that meant was that the interest rates on a 2-year, which is conveniently known as the shadow Federal Reserve, went down, right? And that's how I want you to think about the 2-year. If you're not watching the 2-year, it's extremely important to know how capital is going to flow. And this is important for Bitcoin. There's a lot of people who think that, okay, because I own Bitcoin, I don't need to know about anything else. And that's a convenient, way of thinking, and that's absolutely fine. But for those of us that actually want to understand why something's moving, which is what always my curiosity was when I was in real estate, I was always wondering why certain deals worked out and why certain deals didn't work out. And that was extremely important for my education to understand. So yes, you can have the approach that I own Bitcoin and screw everything else, but I would implore you to actually learn how capital moves in the market. So, and again, this is why I'm doing these videos. So please help me by subscribing to this channel, sharing this video, helping me spank the YouTube algorithm to get this Bitcoin content out to more people. Because if you don't, then in essence, the algorithm does what it wants to do. And do you think they want to push Bitcoin to people? I don't think so. Whereas you can overwhelm the algorithm by actually subscribing to Bitcoin channels. So here's what's happened. The bond market is basically where capital first starts to flow. So let me start somewhere else. Capital flows from a risk on to a risk off place, and then flows from a risk off to a risk on place. Capital is always in the middle here somewhere, right? It's either going this way or it's going this way. It's either going this way or it's going this way. That's how capital flows. Risk on, risk off. And on the risk on side, you would have equities, right? You would have Bitcoin. A lot of people say Bitcoin's the risk. Bitcoin's not risk on. What are you talking about? These are $10 a month DCA gang members. The only risk off asset while the US dollar is still in existence is the US dollar. When the US dollar collapses, the market will find a new alternative for a risk off asset. And until that happens, it is the US dollar. So whether you want to mentally masturbate about it on Twitter of what is risk on or risk off, based on the trillions of dollars of capital moving around the world, Bitcoin is a risk-on asset at this point in time. So capital's moving around, and obviously we went through a period where the interest rates were shooting up, the Federal Reserve was everyone's terrified of the Federal Reserve, what they're going to do. So capital starts going, wait a second, we better move some risk-on capital over to the risk-off side. So the bonds start selling off, the rates go up, the Fed can chase the 2-year rate, then the equities start selling off, which we saw, etc., etc. All of these things have started to happen. There are trillions of dollars, record trillions of dollars, sitting on the sidelines on the balance sheet of people waiting to be allocated. And what did we see on Friday? We saw the 2-year, or last week, we saw the 2-year go from 4.983 to a low. It closed at the low of 4.543%. And basically what that means is people are fed up of being risk off. People are sitting there going, I'm not generating any return here. I'm going to start moving some capital into some risk on positions. And how it works is bonds is the first step to how the market starts pivoting towards risk on. The market is basically at this point trying to tell people, hey, we think that the Federal Reserve is going to reverse course at this point, and we think that the interest rates have been pushed too high. I've been saying this for a while. I was certainly wrong when it came to the timeline of what I thought was going to happen and how it was going to work. It certainly has taken a lot longer. However, I absolutely believe that within the next, I think I said this a couple months ago, I said within the next 6 to 9 months, we're going to see a drastic shift in rate policy. And so, yeah, this is basically what's happening here. We are going to move towards a risk-on environment, which is exactly what should happen. That's exactly what should have been happening by now. But the market has stayed irrational for a very long time. And when the market stays irrational for a very long time, it will correct to the rational side violently. That's the problem here, right? So if you're sitting there going, hey, when do I allocate? Hey, I'm listening to all these doom and gloom boomers. When is 10K Bitcoin coming in, etc., etc.? The market is telling you to kiss your 10K Bitcoin on the ass and goodbye. Because we're now rallying in the bond market, which means capital's flooding back in. People are locking in those rates as a foundation of their portfolio for now. And then the next stage will be equities. And then the next stage finally will be Bitcoin. Now, what's interesting is Bitcoin has gone up 130% this year without any of this happening, without the bond market selling off, etc., etc. So anyone who's telling you that Bitcoin has had a phenomenal year, it's not seen a single movement as far as I'm concerned. This is not, this is nothing, right? We haven't seen anything yet because the capital has only just started flowing back into bonds from a complete risk-off place. And it's going to go through the different shades of risk on as it approaches more confidence that the Federal Reserve is going to respond and pull the Fed funds rate back down. So this is basically how capital flows. It's important to understand that. If you're in real estate, for example, you know that with a 30-year fixed rate in the USA almost sitting at 8%, there's nothing moving. There's nothing moving in the market. The Fed is going to, at some point, loosen that up so that we can get things moving again. Yes, they might have had to quash demand for a little bit of time, but they can't afford to quash demand forever. So that's going to reverse. Everything moves in cycles. Remember, the Federal Reserve's job, the best analogy that I like to use, is like every Fed chair's job is like flying a plane that's in the sky already before he even gets there. He gets parachuted into that plane. He's got to keep that plane flying. And when he says, where's the goal for this plane? The response back is, just keep it in the air, right? So the Federal Reserve is obviously going to swing too far to the left sometime, too far to the right sometime. But overall, their goal is to keep the plane in the air with no real destination. So that's what's happening here. And now the capital is starting to move back into risk-on assets. And as a result, we should see equities rally. I think we should see the NASDAQ and the S&P 500, which are sub 5% away from all-time highs, get to all-time highs by the end of the year. I think we'll see upcoming a very, very sharp movement in Bitcoin towards the upside. And if bonds continue to rally into this next upcoming week, I think that the market is going to start developing some confidence around its bullish current nature. And as it develops confidence, what will happen is capital that's sitting on the sidelines, I think it's like $6 trillion sitting on the sidelines, is going to say, holy shit, I'm missing out. The equities market is, NASDAQ, S&P is already at an all-time high. Bitcoin's pumping. Everything's pumping. I'm going to miss out. Then suddenly your hesitation to be confident turns into a need to be confident because you're going to miss out on the return if you don't get invested. So at that point, that capital comes flooding back in and it pushes the markets to all-time highs and beyond. Now, what do I think will happen to Bitcoin? I think that Bitcoin is going to be around the all-time high by the halving, which is April. So I think that, again, this is just my speculation. Could be completely wrong. But I think that we get to around the all-time high by the halving. Why? Because we've got a perfect storm brewing here. We've got the bonds starting to rally now. We've got the Santa Claus rally that's about to start in a week and a half, 2 weeks, as expected. Obviously, it doesn't have to start, but as expected. And then we've got the halving coming up, and now Bitcoin's an institutionalized asset. So at this point, it would surprise me if we didn't get to at least somewhere near 10% close enough to the previous all-time high by the time the halving comes around, if the bonds continue to rally. The 200-week moving average on the US 2-year is sitting at 2.076%. It's currently, even though it's sold off huge, it's currently at 4.543%. All of that capital that's going to be unlocked is going to find a new place to go, and that's going to be risk-on assets. And of course, now they have the excuse of wanting to front-run the ETFs as well. So we got the ETFs also coming for January with a 90% chance based on the Bloomberg intelligence guys. So there is a lot coming here, and the bonds rallying is a really, really good sign. Most people won't talk about that because it sort of it goes against the narrative that people want to invest in. People don't want to invest in bonds, but this is how it works. We have a legacy financial system. It's going to go through the process that it's going to go through, and the process is you go from risk off to bonds to equities to Bitcoin. And so this process will play out, and it's up to you to decide how quickly you want to take advantage of your position. So if you're sitting there going, hey, maybe I'll get into it, maybe I've got an equity portfolio, maybe we'll see this, that, and the other. If you've got an equity portfolio almost 5% away from all-time highs, now, if that was me, now is the time that I would be looking to pivot, because you're 5% away from all-time highs. You've done really well on the equities, right? Now it's time for Bitcoin to shine. Bitcoin has not done that yet, but it will. But it will, because at the same time as all of these demand factors coming in, the supply on exchanges is going down at record paces. I think there's less than 1.2 million Bitcoin available on exchanges. If someone knows better, please correct me in the comments. So all of this is a brewing storm. The bonds rallying is a good sign. And overall, capital is about to flow towards risk-on assets. And the furthest on the risk-on curve is Bitcoin. I'm not talking about from a Bitcoin understanding point of view. I'm talking about from the market's understanding point of view. So keep an eye on the U.S. 2-year. If it continues to rally, and by the U.S. 2-year rallying, it means the price on the chart it crashing, right? And as the interest rate gets magnetically drawn over the next few weeks and months, from 5.45% or 4.54% to 2.07%, all of that capital is going to be looking for a home, and then the FOMO is going to kick in and everything else that I mentioned. But despite all of that, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.